In the ever-evolving world of finance and investments, some stories grab our attention like a whirlwind on a calm day. Chamath Palihapitiya, the billionaire former Facebook executive, renowned for his ambitious philanthropic endeavors and known as the SPAC King, fall from grace has left many wondering, was he really the trusted financial guru he appeared to be? Or did he lead retail investors down a perilous path? Let's delve into the high-stakes world of SPACs and the captivating drama surrounding Chamath Palihapitiya's controversial role. Chamath Palihapitiya has recently come under scrutiny on social media, notably Twitter, and faces criticism from various individuals, with Mark Cohodes being one of the most prominent figures. Mark Cohodes gained recognition for exposing fraudulent practices at FTX and its founder, SBF, almost a year ago. Now he is calling out Chamath Palihapitiya. At first glance, Chamath Palihapitiya appears to have an impressive profile as a billionaire and former executive at Facebook. He is also known for making significant donations to address climate change, which can make him seem like a philanthropic billionaire. So the question arises, why is Mark Cohodes targeting him? To understand this situation better, it's crucial to grasp what a SPAC, Special Purpose Acquisition Company, is. About 2 years ago, SPACs were widely popular during a bullish market, and there was one individual who earned the nickname SPAC King.
The so-called SPAC King.
The 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 SPAC King.
I think that SPACs are very much here to stay.
To understand the situation, let's first clarify what a SPAC is. A SPAC, or Special Purpose Acquisition Company, is also known as a blank check company. The way it works is that a sponsor raises funds from investors and pools that money into the SPAC. Once the funds are raised, the sponsor's responsibility is to identify and acquire a target company that they believe has significant potential. After the business combination is approved, the SPAC and the target business merge to become a publicly traded company. Chamath Palihapitiya played a key role as the sponsor of several significant SPACs, and many investors trusted him with their money. Around 2 years ago, Chamath had a solid reputation as both an investor and a businessman. He had previously worked as a senior executive at Facebook and had made impressive investment decisions, such as turning a $25 million investment in the Golden State Warriors into $520 million. He had also made early investments in high-growth companies like Amazon, Tesla, and Slack. Leveraging this reputation, he marketed the SPACs he was sponsoring. However, let's fast forward to the present to see how these SPACs have performed. The question arises, was Chamath Palihapitiya the right person to trust with people's money given the hindsight? Many retail investors now regret getting involved with Chamath, SPACs, and these investment opportunities. Chamath took 4 major SPACs public, each with high expectations. These SPACs were Virgin Galactic, IPO A, Open Door Technologies, IPO B, Clover Health, IPO C, and SoFi Technologies, IPO E. At the time, Chamath's marketing of these companies made it seem like they were the future equivalent of the popular FAA and G, Facebook, Amazon, Apple, Netflix, Google stocks. For example, in October 2020, Chamath announced on CNBC that he was taking Clover Health public through a SPAC. At that time, Clover was a relatively small insurance company with a traditional business model. However, they aimed to transform healthcare with their new software, Clover Assistant, which they believed would significantly increase the company's value. Initially, the stock performed well as Chamath promoted it, but soon, doubts began to emerge about the company's true potential. On February 4, 2021, Hindenburg Research published a report accusing Chamath of misleading investors by promoting a company with significant issues. The report also revealed that the the Department of Justice was actively investigating Clover Health for deceptive business practices. It went on to outline the company's unethical history and questionable business behavior. In response, Clover Health quickly dismissed the report, stating that Chamath and the company were fully aware of the DOJ inquiry, and they believed it did not need to be specifically disclosed in SEC filings. On February 6, 2021, Chamath Palihapitiya responded to the Hindenburg research article by referring to it as a cheap path of screaming into the ether. He suggested that Clover Health's long-term performance would speak for itself. Now, let's examine how Clover Health has performed in the 2 years since then. The stock's value has plummeted by 91%, going from a share price of $13 to just over $1. To put this in perspective, if a retail investor had invested $100,000 in Clover Health, they would now have just $10,000 left. To recover their initial investment, the stock would need to increase in price by a staggering 900%. Chamath Palihapitiya would often issue one-page Twitter reports outlining his investment thesis for the particular SPAC he was promoting. Regarding Clover Health, he had expected that by 2023, the company would have 589,000 total members, with an enterprise value of $3.7 billion. However, by the end of 2022, Clover only had 88,000 members, and its enterprise value had dwindled to $300 million. Furthermore, the company was losing $300 million annually and had not yet posted a profitable quarter. While promoting these SPACs, Chamath portrayed himself as a professional investor. During an investor presentation in October 2020, he claimed that Clover Health had been rigorously validated, not only by himself and his team at Social Capital, but also by some of the most respected blue-chip technology investors in the world. It's worth noting that Chamath had a strong incentive to take Clover Health public as one of his SPACs. In the prospectus, hidden among pages of content, it was revealed that his firm, Social Capital, had invested $25,000 in exchange for 20.5 million founder shares. These shares were valued at nearly $290 million at the time. This meant that for a relatively small investment of $25,000, Chamath could promote the company and receive a significant profit. However, it's important to remember that Chamath was already wealthy, yet he chose to sell his reputation and these underperforming SPACs to retail investors for substantial gains. Chamath issued 3 more SPACs to the public. How did these perform? In September 2020, Chamath Palihapitiya arranged a merger for a SPAC IPO-B, which he had high expectations for. This particular SPAC began trading on the Nasdaq in mid-December 2020 at a price of approximately $30 per share. Today it's valued at $2.30. Representing an 89% decrease in value. IPO-A, which was Virgin Galactic, managed to take people to space, but its investors didn't quite have the same trajectory. The stock is currently trading at $1.74 per share. However, Chamath Palihapitiya had already cashed out of the company when its stock price was $25, making a profit of $310 million. This situation, where he profited from a company he no longer promoted as positively, is one of several examples that have led many to label him as a pump-and-dump merchant. The final SPAC Chamath was involved in was SoFi, IPO-E, which went public through a SPAC in June 2021. Since then, SoFi's stock has declined by around 60%. These are the results of the SPACs that Chamath Palihapitiya, a figure who claimed to have done due diligence and supported retail investors, was associated with. Quite ironic that the same individual who positioned himself as an advocate for retail investors ended up causing them to lose millions of dollars, all while profiting from these situations. Consequently, this has left many retail investors frustrated and upset with Chamath. In response to the losses suffered by these investors, one might expect Chamath to issue a well-deserved apology. However, his response on Twitter was far from that. He stated, "I didn't inflict any losses. Stop being a victim. The world will pass you by." It's estimated that Chamath made roughly $750 million across all of his SPACs. And ironically, the SPACs did well, but not for the investors who experienced losses of 60% or more of their investments. We have come to an end of our story today. If you found this story captivating and want to stay updated on more intriguing tales, don't forget to hit the subscribe button and check out our previous videos.